Assalamu alaikum wa rahmatullahi wa barakatuh, and welcome back to the Campus Dialogues, a Muslim Views production in affiliation with Muslim Fin, your roadmap to Islamic banking and finance. I'm your host, Ali Sali, and here to introduce our special guest this evening is my good friend and colleague, Siraj Buzik. Siraj?
Assalamu alaikum, Ali. How are you doing?
Good to be back.
It's good to be back in the studio. And we're quite thrilled because we have Salih Salam joining us again for a follow-up discussion. And a lot has happened since the last time we spoke. And for those who don't know Salih Salam, he's got deep expertise in portfolio management, equity investments, and innovative financial strategies, which has made him quite a respected voice in the industry. And today, we'll dive deeper into his insights, explore emerging trends, and then also discuss how his work continues to evolve in this dynamic landscape. Salih Salam, welcome back.
Assalamu alaikum wa rahmatullahi wa barakatuh. It's lovely to be back in your company. Alhamdulillah.
Salih, shukran so much for making the time. And like I mentioned the last time we chatted, so much has happened since then. We've seen Trump take up office. We've seen the prices of oil and gas fluctuate, gold, the continuous issues in the Middle East, and then we've got the sauna happening locally tomorrow as well. So what is happening in 2025?
Subhanallah, so much has happened since we last met. I think before I try and answer some of those questions that you posed to me, to the extent that I can, it would be quite useful to just give you a little bit of an update in terms of how selected key indicators have performed over the last month, especially since so much has happened. So let's just briefly reflect. If we go on to, inshallah, onto slide one, one of the most important prices in markets, basically two key prices. It is the US long bond, it is oil prices, and for South African investors, of course, it's the 10-year bond. So over the last month, the US long bond basically rose to around 4.51. The currency, which is the rand, was flat at around 1850. I know it's obviously been quite volatile given some of the statements that Trump has made in respect of South Africa. If we look at global markets, MSCI World for the month of January has been up around 2.4%. Locally, the JSE index was also up 2.4%. Now, obviously, the first 2.4% was in dollars, that's the MSCI World, but the JSE index was up also around 2.4% for the month of January, but that's in the rands. So just bear that in mind. The real star of the show for the month of January, given all that has happened, really has been the JSE Resources Index, called the RESI 20, which was up almost 16.4%. You spoke about gold earlier in your introduction. We'll come a little bit to that, but that was obviously a major contributor to this very strong performance that we saw in the resources index, or around 16.4%. Fortunately, alhamdulillah, sharia-compliant investors don't invest in financials, and financials were down just about 3.1% for the month of January. Alhamdulillah. As far as commodities are concerned, obviously all your listeners are always, we all see the big dent that filling up our tank makes whenever we fill up. The price of oil came down a little bit to around $76.2 a barrel of oil, given the let's call it the cessation and the ceasefire that we've seen in Gaza. Alhamdulillah. Gold was absolutely spectacular for the month of January, up 8.7% to now almost $2,842 an ounce. So that's incredible. The other precious metals like platinum and palladium rose between sort of 5.5% to almost 8.5% as far as palladium is concerned. If we go on to the second slide, locally, and just using a proxy for looking at the performance of the average Sharia fund. So I'm not focusing on a specific fund, I'm looking at the average. So the JSE Sharia index, which is a formal index, had a very strong month last month in January, up 9.2%, and for the year to the end of January was up 17%. The average Sharia fund for the month was up around 2.5%, versus 13.5% for the year. And the average Sharia income fund, so those Sharia investors who are investing what you call an income fund, which is a very conservative fund, it gained around just short of 1%, around 0.7%. For the year, the average Sharia income fund gave a return of around 8.7%. The average balance fund, so this is where your Muslim investor is typically investing their retirement savings in, so your pension fund, your provident fund, your retirement annuity, and so on. That went up 2% for the month of January and around 10% for the year. And then for those Sharia investors that are investing in Sharia global equity funds, for example, the average Sharia equity fund for the month of January went up 3.7% versus 8.7% for the year. If we go on to the third slide, just digging a little bit deeper, looking beneath the hood, if you will, I mentioned that the real star of the show, the one that really glittered for the month of January was gold. So we saw that some of the top performers for the month of January was shares like Harmony Gold, Anglo Gold, Goldfields, for example, gaining anywhere between 48% and 36% respectively. We also saw Richemont, which is a Swiss company, but owned by South African families, the Ruperts. That also gained significantly, up 31%. Bringing up the rear end in terms of the shares that were quite weak for the month of January, we typically found what you would call interest rate sensitive stocks. So we see stocks like Mr. Price, Pepco, for example, and your banks, losing anywhere between 14% and 6 and 7%. Globally, onto the next slide, some of the best and worst performers, if you look at just for the month of January, globally, we found shares like Robinhood, which is basically, what you're trying to do through your wonderful podcast is democratize access to financial services. This is obviously a platform that people use to trade not only stocks, but just generally, I would say, democratize access towards financial markets. That was up 41%. Spotify, which is the music platform and audio podcast platform, up very, very nicely, up 39%. And there you can also see, actually, Richemont, which was one of the stocks I spoke about in the previous slide, being one of the best performers in the South African market, actually, for the month of January, was actually one of the best performers in the world, never mind just in the South African stock market. And so that did around 29%. And then, of course, in terms of what were some of the key laggards, Puma, those were Puma techies. That lost quite a lot, 34%. Fiji Electric down 18 or 16%. And then Edison International lost around 35%. So it's quite an interesting and challenging time that we have in markets.
Absolutely, and so when you look at the markets now, Salih, as an expert, as a portfolio manager, as a chief investment officer, what strategies are you putting into place to make sure that you provide your clients with consistent returns for 2025?
I think that's a very difficult question, and the reason why that is we're living in a period now where, of course, of the last 2 years in particular, if you just look at, for example, U.S. markets have had 20-odd% returns in a row, and they've typically never done that 3 years in a row where they give you 20+% returns. They've also come off a period over the last 14 years where they've outperformed other global markets dramatically. We've now come into also a period where Trump has just come in, and what he is essentially doing is in a manner of speaking, is in a sense tearing up the rule book of how it was done before. So as investors, it's quite hard to basically to take a firm view as to how things are going to pan out, because the rules of the game are being redrafted as we speak. So that means then from an investment strategy perspective, of course, you want to make sure that you buy assets that have got significant what we call margin of safety, meaning they are looked at from a range of perspectives. There's multiple levels of safety, if you will, not just in terms of the valuation, but equally just in terms of, for example, their business models, their exposure to things like trade with the US, right? Okay. You want to really kind of be quite diligent in terms of trying to understand that, because they could be quite exposed to tariff risk. And as far as your overall portfolio is concerned, I think the key word that sticks to mind is what I would call strategic flexibility. Why? Because the rules of the game are being changed, and you need to be able to be structured in your portfolio that you are flexible enough to be able to capitalize on opportunities as they arise. Make sense?
Absolutely. So flexibility and really looking at the changes in markets. And like you said, the rules are actually literally being redrawn as we go on day by day. Obviously on this podcast specifically, we tend to focus in the Sharia space. And one of the asset classes or investments that we're very interested in is gold. And the last time when we sat here, Salih, you gave us a view on gold, and I think you actually told us to buy some gold. And how has gold been performing since then?
Yeah, Alhamdulillah. Gold has been exceptionally strong. It has just hit an all-time high now of about almost knocking on $2,900. In fact, $2,850 an ounce. And this has really been, those same forces that I spoke to you about a few months ago, just in terms of central bank buying, the watershed moment that had occurred when basically the West stroke the US essentially seized the assets of Russia. Central banks around the world basically took note and said, look, we got to find a way to diversify our foreign exchange and our foreign reserves. That coupled with very, very what is called expansionary, or let's just call it undisciplined, if you will, to try and get your audience to understand a little bit more, undisciplined spending policies by governments, including the US, where they've run significant sort of deficits, has also raised concerns around the sustainability of global debt levels, not only in the US but in other economies as well. That then, coupled with, of course, the fact that since we spoke, President Trump basically came in, and his number one rule is that there ain't no rules. Okay. Now that's important because historically, in a sense, post what I think I spoke to you the last time, the so-called Washington Consensus, was that there was going to be a so-called rules-based order.
Yes.
Right? But now once you tear up the rules, in 2 weeks after sort of coming into office, you basically say, look, I want Greenland, Canada, Gaza to be the 51st, 52nd, and 53rd state respectively, right? All of a sudden, the rules of the game are now completely changed. And that then also has added a significant sort of concern to global investors. And consequently, it has acted as a further tailwind to gold. And gold, of course, has got significant scarcity value as well.
Sorry, I wanted to ask you, you mentioned that gold is currently at the all-time high. And so for those who haven't invested, I mean, is there still opportunity for them? Do you see gold still, going that trajectory, doing well? And then also you mentioned the statements that Trump's been making. What impact does that have globally on the market? Like just the thing that he's currently saying with Gaza and buying Greenland, etc.
Yeah, so what investors are now basically are looking for is a hedge against all of this uncertainty in the context of their overall portfolio. In the past, they would buy, for example, US treasuries, right? And of course, US treasuries have come up anywhere from 0%, close to 0% to now 4.5%. So objectively, they are far more attractive at 4.5%. But think about it this way: if you're a foreign holder of US treasuries, right? And all of a sudden, potentially, because those are dollar-denominated assets, so all of a sudden they can be seized, right? You're not too sure about buying US treasuries at 4.5%. So what you're going to do now, in terms of trying to hedge your exposure and your reserves, you're going to buy gold. So I continue to believe that those secular tailwinds, in terms of fiscal laxness, in terms of how governments around the world, including the US, are racking up debts, in terms of how the rule books are being rewritten as we speak, all of those secular forces are still at play. So this is not financial advice. Let me qualify that. But as long as those forces stay in place, gold prices are likely to have a tailwind and remain elevated.
Now Salih, before the beginning of the podcast, we were chatting and we talked about the debt that the US has been able to accumulate over the last 200 and odd years, right? And we said that the US accumulated about 12 trillion in debt, or the deficit of 12 trillion within 200 years. And then over the last 4 years or so, another 12 trillion. And then interestingly, you mentioned that there could potentially be a way for them to get out of that debt in terms of the assets and liabilities. Could you maybe just touch on that?
Yes. Yeah. So if you look at the, for those of your listeners who have done accounting, so you think of assets and liabilities, and on the one side of your so-called balance sheet, you have all your assets, and on the other side of the balance sheet, you have all your debts. So yes, it is true that the US and other central banks have been racking up their liabilities, right? Their debts, to use common language. But at the same time, central banks, including the US, on their balance sheet also carries a significant amount of them carries gold on their balance sheet. But for some quirk of custom, they don't actually carry the gold at the market value that it is, that you see now, $2,840 an ounce. Those assets are actually marked at much less. Okay, so now when you look at the balance sheet, it's actually in a sense not what you would call mark to market. It's not actually valued using the current or the spot gold price. So now, one of the ways to make your balance sheet look better, right? Think about it this way: if you keep your liabilities the same, but all of a sudden, the value of your gold holdings goes up. So instead of it being carried, for the sake of argument, at $150 an ounce, where it's currently valued at $2,840 an ounce, you now mark the gold price goes up to, let's say, I don't know, let's just use a crazy number, $10,000 an ounce. What's going to happen? Your value of your assets are going to go up dramatically from the carrying value of $150 all the way up to $10,000. And even if you carried it at $2,800 an ounce, you now market at $10,000 an ounce. It means it went up almost 5 times or 3.5 times. And that way, the value of your assets in relation to your liabilities all of a sudden looks much, 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 much better.
Sorry, Salah. That's very interesting. The question I wanted to ask you was, we've seen a growing role of technology in financial markets. I think if we look at the advancements of AI, big data, machine learning, etc., how are those transforming investing as well as the Sharia-compliant portfolios?
So the AI, machine learning, it is an extension of the mobile revolution that we've seen over the last 10 years. In fact, it's another chapter. In fact, probably one of the best ways to, or sort of historically analogous ways for us to kind of get our minds around it, is if you take a sort of like a history lesson and you think of the creation of the printing press, right? The creation of the printing press was a huge seminal moment in the development of not only of the world, in fact, okay? Because now what happened was previously, only a small amount of clergy in the church basically had access to books. All of a sudden, with the development of the printing press, everyone could have access to books, right? Everyone could have access to books. And it no longer became the exclusive domain of the clergy. So every person could have it. Now think about that in terms of the multiplier effect that had on the creation of knowledge throughout Europe, the rest of the world, and in fact humanity. Just that development of the printing press. Now what has happened is, with your device, the access to the internet, what do you have now? You have, every person has got access towards billions of printing presses, okay? And through AI and ChatGPT and DeepSeek and Qwen 2.5 and Claude and all of these devices, what do you now have? You have PhD level, professor level expertise on tap, right? Whether you are sitting in Bali, whether you are sitting in Mitchell's Plain, whether you are sitting in Boston, you as an individual, irrespective of your education, as long as you have access to the internet, you have on tap access to PhD level expertise on any subject. Subhanallah. So that is significant, what you'd call democratization of access to knowledge. So now, for example, you can use ChatGPT, Claude, whatever. If with the right prompt, you can type in there, assume zero knowledge, and assume I am a fundamental investor. Give me explain the economics and the business model and the valuation of stock ABC. And within 14 minutes, you will get a research report on that particular stock. That's ajib. Right?
Amazing.
So
amazing.
that level of access, once again, it's coming back to this printing press. Everyone will now have access to this. As long as you've got access to the internet, you've got a device in your hand or tablet, you will have that access. And that's absolutely going to lower the barriers to entry. It's going to lower the barriers to participation by let's call it the average investor, and it will empower individuals and investors in a way they haven't been able to be empowered before. So think about it this way: I just passed with a matric, and now all of a sudden on tap, I've got professor level education, professor level expertise on any discipline available on tap. Imagine what that does.
Sorry, that seems to be the way the world is going with AI, etc. but do you think there is still a risk in terms of people using AI rather than actually going to a financial advisor or to an investment company to get assistance or advice around investing on what stocks or shares, etc.?
Yes, absolutely. I think, of course, you've got these two. On the one hand, you've got the massive force or trend of democratization to access to really, like I said, PhD level knowledge on any domain. So that's absolutely true. But that doesn't necessarily mean that one should not seek advice on any discipline, including financial advice. So this is not meant to be a substitute for that. So absolutely it is a risk. But think about, again, the other case. Someone who doesn't have access to a financial advisor, right? Someone who doesn't act, he's sitting in the R somewhere, wherever. He or she doesn't have access to a financial advice, but they are able to ask intelligent questions of, for example, the AI engine, right? Then you're going to get, provided you ask intelligent questions, you are going to get a credible roadmap as to how you should approach that particular topic.
Salih, I still believe that someone like yourself has way more knowledge and experience than AI. And based on that, I would say, before we end, maybe you can give our viewers a hot stock tip.
Yeah, gee whiz. So this is not financial advice, right?
Absolutely.
But one of the I would give the stock that I think is extremely attractive. It's a global share. It's called Novo Nordisk. Novo Nordisk. So they are the leaders in diabetes. They're a Danish company. In fact, they're the largest company in Denmark. They get profits from all over the world. The global leader in diabetes, but at the same time, they also discovered fortuitously that their drug also has significant benefits for weight loss. And with the obesity, let's call it pandemic, if you will, globally, the demand for their weight loss drug has basically gone exponential. But it's still the tip of the iceberg. And that secular trend is likely to continue. The share price over the last couple of months have basically come down by 30 or 40% because they disappointed the market slightly, at least short-term investors slightly. But for those long-term investors focusing on these secular trends, this really represents a wonderful entry point into a global leader with very strong secular tailwinds, and that's currently now, after this significant pullback, attractively valued. Now, once again, this is not financial advice. This is just a stock that I believe is attractively valued and has got really good secular growth tailwinds.
Fantastic. Salih, we really appreciate having you back. And we hope to see a lot more of you. And we know that our viewers look forward to the podcast that you are the guest on. And there you have it, guys. This type of stock tips is only, you can only find this on the Campus Dialogues with myself and Siraj and guests like Salih here. So please, if you like this episode, please give us a like, hit the bell icon, and leave us some comments. It really helps the channel. And assalamu alaikum wa rahmatullahi wa barakatuh.